What's up, ladies and gentlemen? Robert Vazquez. Wanted to give you guys a quick update. Where are we at? All right, let's fast forward here. Any questions in the interim? All right, fine. Does anyone know what CAMELS are? Camel ratings? Camel ratings. Anyone?
With the banks.
Say again?
With the banks.
Banks? Uh-huh.
Bank scores. They're scored on a camel.
Correct. Awesome. Winner, winner, chicken dinner. All right, so it's not this guy. All right, what CAMELS stand for, it's an international rating system used by regulatory banking authorities to rate financial institutions according to these 6 factors right here: capital adequacy, asset quality, management, earnings, liquidity, and sensitivity. Banks that have a 1 to 2 rating are amongst the higher rated banks, okay? They're higher depository banks, they make good loans. Why is this important? Because anyone who's trying to target distressed debt, okay, which is happening now, okay, more especially in the hospitality sector and starting to frack in certain locations in multifamily. This is free information, guys. The FDIC, the banks are required to publish their numbers to the FDIC. Remember, the FDIC insures banks. So a bank can't tell you we're doing great. They'll tell the members of the public that, but they can't tell the FDIC. So if you start targeting banks with a 3+ rating, okay, on the FDIC's website, you have a lot more of a strong footing when you're going to speak to an asset manager, as I started doing, because I started targeting banks with 4+ ratings, and it tells you they're non-accruals. So if you can look at their hospitality sector and say, as an example, Cadence Bank, if you guys are familiar with them, I don't think they're in business anymore. No, they're not. I think Superior Bank took them over. You can take a look at them and you call the asset manager, you say, "Hi, how are you? I want to take a look at your non-performing notes." And they say, "Who the hell are you?" You tell them, they go, "We don't need your help." And I go, "Sorry, bro, you guys are $685 million in non-accruals. You don't need me, I don't need you, you guys need me, all right? So stop bullshitting, give me your numbers so I can save your bank." You don't need millions of dollars in the bank to do that. You just need to have the confidence to tell them that, and they'll give you access to their vault. All right, so that right there helped me not only make a lot of money, but learn the whole banking system. And if you do that creatively enough, you can also get a lot of friends. What I mean by that is I made $3 million doing a DPO, which is a discounted payoff, on a hotel. Guy owed $11 million on a hotel. I bought the debt, negotiated it for $5 million, and sold it back to him at $3 million. It's like a glorified short sale for residential properties. Not bad, right? Now, this is still being done. The fact that the market collapsed before, it had opened the door for investors to come in that weren't, on the stock exchange. Because like one of the times I called Wells Fargo. Anyone can trade with them right now, but you need to place a $50 million trade. You can get a hold of their trade desk, you can buy non-performing notes. $50 million is the minimum for their trade. At least it was then. So we use this information on various debt trades. We got into the hospitality sector, retail, residential. I made a lot of money in residential. I made more money in multifamily, but more importantly, I look at the money I didn't make, okay? And here's what I mean by that. When the market tanked, I spent so much of my time learning about the banking system that I didn't understand the front side, meaning the financing, the capital stack. When I saw these properties for $30 or $40 million, it's like, shit, I don't have $30 or $40 million. I'm making a couple bucks here and there, but I didn't understand the financing structure behind it. That was my mistake, okay? Now, we did very well, but back in the day, I wish I knew people like Javier, okay, that are doing these type of businesses and they're educating people on how to do this. I was so wrapped up on just trying to get my hands on this debt. I went to my website and I typed in the search bar on the right-hand side, Texas, TX. I did that just for the hell of it because I was trying to remember these trades that I did. And 10 years ago today, it'll show my website, October, whatever it was, 2011, it shows all the properties I flipped. Multifamily properties in Texas alone, there's probably, just in October alone, it was over $100 million worth of multifamily. Now, why is this important? I secured the debt, negotiated with the owners, and flipped it. At the time, I was trying to make a shit ton of money, but I realized if I make less money on a higher volume of trades, the probability of these deals going through would be greater, because I could say, you know what, I want to make $3 to $5 million in this. It's a home run. It's a no-brainer. The market's still unstable. Dude, give me 150 grand. Book the deal, you know? And I started getting to the point where I started doing more volume by just trading and just trying to make a little sliver. I wasn't trying to retire off of every deal. You know, good and bad. Now, again, if you partnered with guys like Javier that are educating people on how to do multifamily, I think it's something that would have been very beneficial. So I don't say that because Javier dresses up like Boogie Nights and looks pretty good doing it. I say that because, you know, he's a good educator. All right, so what I didn't know about that trading, I learned very quickly, and I'm going to share this real quick again. I think the goal of every little brother, every little sister is to learn from the mistakes of the big brother or big sister, right? You come over to these type of events and you have this gentleman who tells you about the mistakes he made in multifamily, right? The goal is to not do what he did, right? Which everyone in this business, regardless of where you are in your real estate, you know, learning kind of cycle, you're going to inherently make mistakes, right? The goal is to try to make less of them. You know, if I hear you telling me this, I go, shit, I'm not going to do that. What did I pick up? I better have a contractor to come with, you know, meet me on my next property, right? So I was the oldest sibling in my family. I never learned those mistakes. I had to, you know, buck up and fix it. So why do I share that? Again, following guys like Javier helps cut the learning curve, helps avoid mistakes, and more importantly, it helps you not lose time and money. You guys cannot make you guys can make money back, you can't recoup the time, right? Are you guys following me? You guys with me? Yep. Cool. All right. So what I didn't know then literally cost me hundreds of millions of dollars. Why? Because, as I said, I didn't understand the capital stack. I didn't understand that, hey, I had the control of the multifamily asset, okay? I can go ahead and secure the financing. I thought to myself, $40 million. Geez, I don't have $40 million. I don't even have the 20% financing for that. I didn't understand the power of the nickel. Do you guys know that expression? The power of the nickel? Have you explained that at all to them, the 5%? So I was talking to a hedge fund guy that I know. I own various businesses. And one of these hedge fund guys that I know, he is an investor in medical marijuana facilities. I was talking to him, and he says he met this guy in Tennessee. He goes, wasn't very impressed when I saw him. Guy starts talking. He's got real Southern twang. And he's like, do you even have the money for this? He's like, all I got to do is raise a nickel. And it was funny because the 5% essentially is really all you need to raise to get into a big trade. You can get your debt from an agency lender. You can get your bridge financing somewhere else, and if you essentially raise 5%, you can get yourself into these big ass assets, okay? I didn't understand that. So I was too busy just trying to make a buck that I was losing long-term wealth by maintaining, or obtaining rather, multifamily assets. So my point is, listen, learn, grow, and learn from people that are doing this every single day, or invest in them.